Hello, everyone. Welcome, welcome, welcome. It's an inflation day. Very, very crucial for everyone. It's a very well anticipated event, basically. All the attention is on the US. All the attention, the focus is on what would be the inflation ahead. I mean, there are a lot of technicals in place as well. I mean, in technicals right now are telling us a story regarding what investors and market participants in general um, expect ahead of the main event. So that's why we have seen a lot of interesting moves. Let's say in euro dollar, dollar yen, cable, Aussie as well, especially after the RBA cut interest rates overnight. So many things to cover today. Many things to see. Just now, inflation is out. Let me share quickly my screen. Sorry, that was a bit late. Welcome everyone once again. Please take your questions in our question box over here. I have a 5 minute chart of euro dollar. So let me fix a bit. Oh, okay, this the camera. Okay. So as I was saying, this is the euro dollar in a 5 minute chart. You can see a huge jump benefiting euro for the time being. Basically is weak dollar. As I can see my news feed right now, I can see that inflation, the monthly one at least, it came as expected, basically met expectations, 0.2%, and the core is at 0.3% as expected. Let's see. A bit higher. The core measure is a bit higher than what was expected. Slightly. We're referring to 0.22%. So, but the thing here, let me share the calendar as well. Let's see how we're gonna do it. Share the calendar as well. Refresh. And then yes, Tibusiso. Yeah. Hello. Welcome everyone. Welcome. Replace with the window. Here we are. I have calendar over here as well, guys. Look at that. So in line with the expectations, indeed. Okay. However, the a slightly higher core number. So you might say, but Andre, it's the same as the consensus. Is 0.22%. So it's a very small difference. Over here, we are seeing the rounded number. That's why we cannot see the difference. But that's tiny difference in core is what has pushed the headline, the yearly reading, the yearly release at 3.1% from 3% expected. So that pushed the headline higher, and that's why we are seeing right now a weak dollar. Okay, that's why we have seen this jump initially. All this market noise that initially triggered weak pressure, basically initially added some pressure on dollar. So, okay. the whole morning, as you can see, the asset was consolidating. So right now on the release, I'm getting back to the 5 minute chart. Let me put on the caption so you can follow what I'm actually doing and what I'm actually covering. That's the euro dollar in a 5 minute chart. And yeah, what basically what that's supposed to mean, okay? What that's supposed to mean. Let me just okay, here we are. Go. Okay, so basically, the fact that the headline has lifted slightly higher, okay, is what it causes, as I said, the weakness of dollar. Basically, the why has been pushed higher, because this is an indication of the tariffs. Um, um, Inflationary pressure. This is clearly related and basically supported by tariffs. Okay, this is an indicative of how tariffs affect inflation, guys, especially with things with goods and services, but mainly goods, like things like furnitures, clothing, appliance. So this is a clear impact from the yes, I was saying, from the tariffs. So let me see something first. That's your session, by the way. Feel free to ask me anything you want. um okay, even higher. Yeah. This is the thing, guys. We were expecting a down trick, but instead we have a lift. So even though we were expecting a down tick due to the gasoline prices, the better than expected gasoline prices, however, we have a push instead, and that was the challenge. The challenge was to see how tariffs will impact inflation and whether it will boost it higher. And indeed, this is what happened. So the fact that even though the liberation day, if you remember, was not the tariffs were not like imposed in the liberation day as it was expected, but they had some delays. It was not enough to limit the impact. It has impacted. Of course, that we have a limited impact. Things could have get way worse, but the fact that we didn't get at least an in line with the expectations reading, but we got a boost instead, that's bad. And that basically leaves the room for the Fed to basically, it doesn't leave any room for the Fed to proceed with its easing. So that indicates that the Fed should keep rates unchanged for a while. Okay, so that's why we have a weak dollar right now. Is an indication that the Fed should not proceed with a rate cut next month, or in general this year. Okay, I guess that the Fed Fund futures will change significantly after today's reading. So far we had like a really high probability of a September rate cut, but I don't know whether this is still the case after today's data. It shouldn't. Today's data, the July's CPI, basically the Fed futures depend a lot from the July CPI. The fact we don't have an in line, at least an in line with the expectations numbers, that should impact September's decision, and it should change the odds of a rate cut. Okay, so it seems that employment report was not enough. It will not be enough. Sorry, for easing, for proceeding with the rate cut. So okay, so for the time being, let me check something. There are some speculations about another 3 rate cuts, but next year in 2026. But let's stick on the more short-term one and the September's decision. Odds should have changed, so we have a weak dollar against euro, against, I guess, every single other currency. Over here are the major currency. Very strong demand. This is a 5 minutes chart, I repeat. But yeah, either way, that's a 60 pips move. That's quite massive, as you already know. From 160 territory, 160 bottom, we have seen a jump up to 116. sorry, from 116, we have seen a jump up to 116.55 currently. Okay, so and there is some stochastic keeps pointing on the upwards. This is a 15 minutes chart, so in the very very short time frame for the next few minutes we still see some boost on upside. Yeah, that's yeah, so this is in line with the data. It's not like it is in line with the data. Higher than expected inflation, it's negative for dollar, not theoretically. Theoretically, it is positive, but the fact that it indicates that the Fed should not proceed with any further rate cut is what it has caused this, let's say, boost higher. Okay. For the time being, at least. I mean, this might be a short-lived one. It's just a fear. Basically, it's all about fear, guys. Okay. Theory states that higher inflation, right? A higher inflation requires interest rate cuts. Interest rate cuts means depreciation of the country's currency. And this is what we are seeing. Basically, we are seeing the interpretation of the markets on what the Fed should do next based on this July's inflation reading. But also, it's all about the fear as well. The fact that we are seeing an indication so early. I mean, the impact. It's an indication of the impact that tariffs have so far on inflation. That's causing a lot of fear in the market. It basically pressures the sentiment because this is July inflation. I repeat, this is July. So imagine what will happen on August inflation or even September's inflation, that the majority of the tariffs will be in full gear and will be actually, yeah, I mean, they won't be, they will be, they have been placed, and there won't be any more delays from tariffs side, from tariffs perspective, and the trade deals will be over, and so on and so forth. So let's get back to your questions and take one by one the assets and analyze your preferable ones. Let's do it together. Zippo first come first serve, of course. Bitcoin and Ripple. Last, as inflation US is more important. Okay. Okay. Gold. Okay, let's do gold then. Then Zippo doesn't mind. So this is, let me just, guys, just see what's going on. Let's click on the 30 minutes chart. Here we go. A lot of indecision. So in contrast, this is gold. Okay, gold caption. Let's put gold on. So this is gold in a 30 minutes chart. My bad. And you can see the contrast. Even if I put the 5 minutes chart, look at that. Okay, this is a 5 minute. But in general, we are seeing once again a weaker dollar, but definitely we don't see the same volatility as with the euro dollar. So if I put it side by side, can I do that? Let me see. Come on. Gold. So this is euro dollar. So here is gold. Okay, I have gold over here. And where is my euro dollar? Euro dollar. Here it is. Okay, here we go. I put it side by side just for you to see how massive the big in euro, the move in euro dollar was in comparison with gold. Look at that. This basically 5 minutes. Let's put 5. Look at this move and look this move. Okay, so what's that? What's that? Why we have a way smaller or halfway? I mean, like, yeah, way smaller gold reaction, that dollar reaction, that euro dollar reaction, simply because gold, remember, it is used for hedging against inflation. Okay, that's why this is limited. Um, so basically, we probably have a lot of hedging going on in gold. Okay, however, they both present the same thing: weakness on dollar. So we have seen gold spiking at 33.57. Euro dollar continues on the upside, higher highs, higher lows. No tails at the bottom of my Heiken Ashi. All moving average are pointing higher. All my resistance levels have been broken, the intermediate, the immediate ones at least. My next one was 116.60. These are levels that we have predetermined a week ago in our latest live streaming, remember? Based on the previous swing highs and so on. So the already euro dollar broken three of my resistance levels. 116.60 remains intact for now. Okay, however, as you can see, there is still room further on the upside based on stochastic oscillator. You see, so we have still room on the upside, at least for the very, very short time frame, even though I can see some kind of a hesitation to extend higher. But for the time being, I cannot really be sure that this is the end for euro dollar. Let's keep an eye, okay? Let's keep an eye on the 5 exponential moving average, okay, over here, to see whether we might enter a consolidation. Gold on the flip side, still there is further room on the upside. This is still, again, a 5 minutes chart. Okay, so have gold on the left hand side and euro dollar on the right hand side, 5 minutes chart. So look the difference between the two. On gold, our stochastic has entered the overbought territory, but we don't have any bearish cross yet. We don't have any, we still seeing it pointing higher. So that presents that there is still some room on the upside. It might be a bit limited, but still some support is still on. Euro dollar on the flip side, we have already a bearish cross in stochastics. Doesn't indicate necessarily that it's a reversal. It just indicates that we might consolidate a bit before another attempt to the upside. And I'm saying attempt to the upside because we still have a lot of indications for a bullish bias. Parabolics are remaining well below the price. Moving average are still pointing higher. MACD is still positive. We don't have any a move of stochastic below overbought territory, still above 80. So it seems that there is still some bullish bias. This is not a reversal. I repeat, for the time being, this is just some kind of a consolidation and a bit of a sideways movement. While gold on the flip side, it seems that it's still supported, and that's in line with expectation. I mean, that's in line with the data. So we actually saw this time that markets reacted in line with the release. I mean, it's not the vice versa. It's not. I mean, it's exactly, they have interpreted a bearish dollar due to the increased odds of Fed keeping rates unchanged on September, and on the fact that we have a clear indication, we have a clear impact from tariffs in the US economy and the US inflation. Tariffs have a positive, let's say, a positive impact on inflation. They keep inflation higher. They make goods and services more expensive. Consumption could be affected. It has already been affected. And this is just another confirmation. So that's something is wrong over here. Something, so there is a lot of dodginess, you see, lack of indecision. So let's see. Let me just check my news feed. Overall, by the way, since we have side by side, I'm gonna keep this side by side, guys. Euro dollar and gold. Sorry, gold and euro dollar. I'm gonna go higher for both in a 1 hour time frame, just to remind you where we're standing, right? So basically, let me just. I would like to remind you. I thought I saved it. I didn't, apparently. Last time we discussed a lot actually, about the fact that gold is in an ascending triangle with a flat top. So we're still there. It hasn't broken. So we are in a 2-day, for a second day in a row on the downside. So as a correction, with an indication that if today's session ends close in red, massively in red, like with a big candle, these are daily charts, we might see the asset retesting 3300 territory before another attempt to the upside. So this is the overall picture. So overall, we're seeing that this week gold is in a negative outlook. Okay, that's overall. Okay, so however, in the very short time frame, we have seen some support. This is a 30 minutes chart due to the data, but that doesn't change the negative bias in the overall picture. So it has pretty much stuck in a range so far today, since yesterday basically. Okay, retested a break below it earlier. It didn't manage. It returned back into the range due to the US inflation release. So keep an eye, okay? Keep an eye on this range, because a return back lower, and more precisely, a confirmed closure below 33, 40, 33, 35, it could open the doors and be a confirmation basically for a further decline, with the next immediate support. Sorry, just a second. Okay, obviously the 3300 it's still on, but for with the next immediate support at, here we go. Let's use our latest swing lows: 33.30, 33.16, 17.16, and the 3300s. Okay, so keep an eye for a confirmed closure below the latest swing low, which is 33.41, because this could open the doors further on the downside. So gold in a negative bias for the week. Intraday, indeed, for scalpers or a very short time frame traders, we have seen a jump. However, it's already lacking, it's already reverting, but not confirmed. I would like to see switch of parabolic SAR. I would like to see a move below and a closure below 33.49, and I would like to see my moving average pointing lower. Okay, so we need further confirmation. Next support intraday in the 5 minute chart at 33.41. So keep an eye on that. Let's get back to euro dollar. Euro dollar, basically, sorry for that. Just a second. Too many lines. Let me get rid of it. Sorry. Sorry for that, guys. Just a second. So I have, last week, we have connected the top. the top, the highs, these two lower highs, okay, and we have a ceiling over there, so we keep that as our ceiling. The ceiling is still at 117.33. We are far away from that level, so just have it, just put a trend line on, just to have it in mind for the remaining of August. Now let's zoom in. We have seen in general, August has been like supportive for euro dollar. That's why we have seen this pullback above 116 level. And basically, the asset remains above 116 since last week. Yeah, for the second week in a row. Okay. So some pullback has been seen, not the reversal sign yet. We need to wait a bit. Actually, in a minute, these candles will close. So we're going to have a better understanding, at least the very, very short time frame. So that's not an impressive candle for sure, neither in gold, neither in euro dollar, both in a 5-minute chart. Long tail at the bottom, but pretty small body. And here we have the break. Come on, okay. For sure, there is some reversal signs, and stochastic has already started pointing lower in both. So yeah, we need confirmation that though I don't see the confirmation. I'm going to return in a bit back to this too. Okay. In the meantime, let's move on. Let's move on back to, guys, any questions? Any questions? Please let me know. Let's get back to Ripple and Bitcoin in the meantime. So I will return back to this two in a bit. I want this candle to close in order to have a confirmation whether we're gonna see a reversal or this is just consolidation. I need further confirmation. I'm gonna return back in a bit. Now, cryptos. Let's start with Bitcoin. Sorry for that. We have been in a channel which was broken yesterday. I don't know whether you have seen this. I guess you've seen this position. I mean, it's a channel that we have set last week. I'm sure that you have seen yesterday's breakout, a really strong, decisive breakout. So we're getting some bullish signals from Bitcoin. Okay. Let me change. I would like to I can't apparently. Okay, was trying to change the, shall I put it here? Much better. Not at the top. The could be fine as well. Never mind. Okay, let's keep it over here. And oops, sorry, 100%. Okay, perfect. Sorry, my bad. So as I was saying, we had a very, very nice bullish cross yesterday, bullish breakout, for Bitcoin. So yesterday's session, the daily session, closed outside the channel, outside the downwards channel. So that is a very strong daily candle, full body candle, big candle, closing above the channel. And that basically gives some bullish signals that the rally might continue, because overall, the whole year, I mean, definitely for the second quarter of the year, the second quarter of the year was really, really positive, was bullish. We have seen the asset not double in its value, but at nearly there. From 77,000, 75,000, we reach 123,000. So that's not double, but is nearly there. So that gives the indication that we might might be a premature sign for another bullish trend, for the continuation on the upside, and so on and so forth. A premature one though. Okay, so MACD is still positive. Okay, it holds positive. I would like also to, so anyway, the asset is holding its value, I mean, for the whole year. It's still at record highs. I mean, it's at levels that we haven't seen in the past. I mean, it's definitely sustained its gains the whole year. And you can see that this is a weekly chart, and we are been hovering at the top for 1, 2, 3, 4, 5 weeks in a row. So that might be an indication for a new bullish trend. So I want you to be very, very careful tonight, in general, the closure of the week, okay? Because we might have the beginning of a new uptrend in the long term and the medium term. Now, intraday, though, I'm going to get back to where I was in the 1 hour chart, okay? We have seen, this is the 1 hour chart, okay? We have, after the breakout, that's the breakout of the channel over here with dotted. Okay, we have seen some reversal, more than 50% reversal, but it's still holding outside and above my channel. That's very important. Okay, it hasn't entered back into the channel, it holds above it. So that's another bullish indication. Of course, though, as we keep saying, we need to be a bit patient, right? We need further confirmation. We have 2 signs so far, the breakout and the fact that it's still holding above it. However, for confirming that this move will continue, we need to see a return back to 120 territory and a break of yesterday's highs. So that means not only a breakout of 120,000, which is a round number, somewhere here. Okay, somewhere here. But ideally, a break of yesterday's highs, 122,000, okay? Food for thought. Now, for our scalpers or short-term traders, etc., we have a reversal after this is a 5 minutes chart, guys, for anyone that is a scalper. Bearish crossing stochastics. Parabolics are, though, still below price. So we have mixed picture. Mixed signals. Very mixed signals. Okay. Reversal. This candle is new. It's about to close in 3 minutes. Moving average are pointing on the right hand side, neither up, neither down. Mixed. Still, my support is at 118.8041. I'm gonna change, and I'm gonna where is it? I'm gonna use instead, where is it? That's Ripple. I'm gonna check also my Japanese candlesticks. So yeah, that's the same, the Bitcoin again in a 15 minute chart, but with using Japanese candlesticks. Okay, let me check. So rally, overbought, reversal, held above the 118.745. RSI holds as well above 50. Moving average are pointing on the right hand side. So yeah, this pullback It looks limited. This pullback looks to be just a correction of a really overbought condition over here. Yeah, because parabolics are still support the bullish bias. Moving average, the same. Okay, Mark, this is a more of a long-term outlook. I haven't changed the settings for my 1 hour, 4 hour, or even daily chart. So yeah, let's get back to these two. So gold holds and euro dollar reverse. Okay, euro dollar reverse. So it already retested the 116.20 territory, and we have some correction over here. Yeah, guys. So the same stance for, sorry, just a second. Yeah, the same stance for Bitcoin, because we have this is Bitcoin again, sorry. We have, again, our very first Heikin-Ashi candle with no tail at the top. So there is some pressure. So if this decline continues, the next support, it will be this neckline over here, this double swing high. So 118605, 118605. There is some pressure on the downside. This is the very first Heikin-Ashi with no tail at the top. I know the parabolics suggest otherwise, but stochastics, along with the move with the candles, indicate that there is some room on the downside. It might not last for long, but our next support is still there. 118,841, which is the latest low, and the 118,605 in case that 118,840 breaks. Okay, so another move on the downside. These two, keep these two. Yeah, that should be around 23% of our move. Let's check as well. So it should be, yeah, somewhere there. Okay, really close to it. It's in line with the 61% and 38%. Okay, so that's gold reverse as well, guys. Parabolics are touch this golden euro once again. Gold reverse. We have confirmed signals for a reversal. Parabolics are nearly touched the price, indicating that we're going to see a shift. We have our very, very first bearish cross of the fast moving average, and there is a clear indication for a reversal in gold in a 5-minute chart. Bearish cross, parabolics are touched the price, and the very first Heikin-Ashi candle with no tail at the top, suggesting a reversal back to 33.40 territory, or even 33.35 levels. So the lows that we have seen the last 3 hours in a row. Yeah, that should be it. Yeah. So 3341, and here we go. Here we go. Let's see something as well. Okay. We are halfway, are we? Yeah, halfway. Okay. Let's see what's going on as well. Gold. Yeah, we have done gold, guys. We have gold on the left hand side and euro dollar on the right hand side. Okay. This is gold And this is gold, and this is euro dollar. Gold and euro. I wanted to have it side by side, okay, just to see how premature was the how immediate was the reaction in euro dollar, and how limited and and conservative was the move in gold. As I said earlier, for anyone that has not joined us from the very beginning, gold remains in a negative bias this week. We have seen a really big sell-off today for gold that opened the door to 3300s. So remember that gold is in an ascending triangle with a flat top and an indication for a reversal and a retest of the bottom of the triangle. So this week, gold has been one of the biggest losers, and the fact that we have a reversal today so far. Not only, I mean, that was before the release. That was since last night, if I'm not mistaken. Yes, since yesterday. The fact that we have seen a pretty bearish, I mean, a reversal yesterday, and further decline so far today opens the door to 3300s level. Okay, so the boost was just on the release, on the US inflation release, and it was limited, as you can see, because the asset returns lower. The same stands for euro dollar. So already reverted 50% of the gains, but it's ready to do another. Euro dollar is ready to do another attempt on the upside. We have a bullish cross of stochastics indicating that the decline is over, and we might see another attempt to retest the 116.45, 116.60 territory. So yeah, nice. That's 5 minutes chart. We're referring to very strong time frame, right? Very fast, sorry, time frame. So the correction is over. Yeah, and we're probably gonna see the asset reverting back, since we have seen we have seen it finding some support at the 16 exponential moving average. Parabolics have remained positive, bullish stochastic over here. So clear. Lipo. So I don't want this one. I don't want this one. Okay. So let's see. We haven't touched dollar, yen, and Aussie yen. Neither cable. Just a second. Okay. Okay, so stocks also. Stocks were well supported. Nasdaq, S&P 500, Dow Jones as well. So okay. Okay. Let's see. We have Mr. We have Fats Bullard speaking in CNBC right now, stating that he will be happy to proceed regarding the Fed chair role. So will it be the next chairman? Okay. No, his comments have not really impacted the market. It was inflation mainly. Just a second. Course. Let's see. Okay. Okay, nothing really new other than what we have said already. Yeah. Okay, nothing really new. We have a mildly higher inflation as tariffs stung less than expected. Bearish dollar, euro benefited initially on dollar weakness. Gold on the downside mainly. Stocks have seen a rally. You see? Yeah. Stocks have opened in green, right, in the US Open. This is Dow Jones. That's the very last hour session. And you can see a decisive move higher. So stocks higher, dollar mixed, basically mainly weaker against euro, pound, as well, gaining some ground against gold, dollar, yen gained some ground as well against dollar. So we have a reversal down to, this is dollar yen. We have seen a reversal back to 147.93. So there is a bullish sign for dollar yen over here. So let me just, okay, just a second, guys, just a second, sorry. So next support remains at 148. The very next one will be the 147.20 level. Okay, so we have it as a bit of a reversal, but the fact that I'm getting higher MACD, so rising MACD, rising stochastic, that's very, very interesting in dollar yen. We have a bullish bias in both stochastics and MACD, not perfectly in line with performance, with dollar yen performance, but this presents bullish bias on the background for dollar yen. So that suggests that the rally, the upside might continue for a while. So let me see a bit. It's the 4-hour chart. So if the asset sustains a move above 148, then that could be a sign for a reversal back to 148.90 or even 150, back to 150 level. So that's very, very important. That's very important. We need to keep an eye on it. But is this enough? Is this enough? So we have some kind of an upwards channel being developed. Not perfect one, but there is some kind of a upswing. Let's wait and see. So there is a reversal. In the 4-hour chart, we are getting like increasing bullish bias from MACD and stochastics as well, suggesting that um, the asset could return back to 150, and so far this intraday reversal is temporary. Anyway, as long as it doesn't break the 147.90 level, there is not a clear indication for a reversal lower for pullback. So for the time being, dollar yen remains on the upside. Okay, so as long as it sustains a move above 147.90, then we remain in a bullish bias with the possibility of rebounding up back to 149 level and even 150 level. So let's see some questions. There are some analysts and global strategists stating that inflation figure today will not be enough to derail the Fed from cutting rates in September. That's interesting, even though I don't think so. But let's see. Because we have clear evidence of tariff related pass through to consumers. So this could be enough for the Fed to keep rates unchanged on September. However, we need to see still the GDP, the growth, and the next NFP. This will make everything clearer. Yeah. But definitely today's report, guys, just show that that it has a clear impact on the US economy and the US inflation. So the tariff rates, the US tariff rates right now, it's at 18%. This is the highest since 1933. So yeah, so that definitely raises a lot of questions about the Fed rate cut path. Definitely a lot. Even though the Fed rates, the Fed fund futures right now stand at 90% probability of a rate cut. Still, I mean, it changes the odds of another 2 rate cuts by December. Okay. Okay, so let's see your questions. No questions? Guys, any questions? Anything else? We have seen gold, we have seen Bitcoin, Euro dollar, dollar yen. We haven't seen Aussie. Okay. In which we have seen a bit of a reversal from 165.30 territory. Decline on the decision overnight from RBA as well. So as you already know, we have seen like a rate cut this morning from RBA, right? So that is what was responsible for this lower this move lower this morning at 164.80. Rebounded on the inflation just earlier, just an hour ago. However, this decline is expected to continue, so keep an eye. Why? Look your moving averages, look your RSI. The RSI remains below 50, right? And it keeps, it's still pointing further on the downside. The last hour, we have seen already a reversal of the 50% of this rally, of this boost. So it's below the midline of this candle. So yeah, that indicates that the decline could continue with the next immediate support level of the latest low, which is at 0.6480. I'm gonna just add the very next one should be at 164.50, 164.60 to be more precise, and 164.35. Sorry for that, just a second. That's looking like, that's very weird. It's a neckline. So the support neckline, yeah, okay. Okay, perfect. Yeah, MACD. That's I'm not using Heiken Ashes over here. I'm using proper Japanese candlesticks. RSI remains below 50 points further on the downside. MACD is negative, and it's not on. So I'm gonna get rid of stochastic because it's in 1 hour chart, so it's not like applicable for my 1 hour chart. So look at that. RSI points on the downside, so points to, indicates further decline. Below 50. MACD posting lower lows, and we have already a reversal of more than 50% of the gains that we have seen the last hour, and that suggests that this decline, the morning's decline, could continue with the next immediate support level at 0.6480, and the very next one at 0.6460 and 0.6435. That's the very next 3 support levels. Okay. So perfect. Okay. Yeah. You are right. We haven't went through Ripple. Guys, any questions? Okay. Resume. That's Bitcoin, by the way. We did mention earlier, for anyone that has just joined, don't worry. You can drag and drop your cursor earlier. At the to find the time that we have covered gold or Ripple or Bitcoin or dollar yen, etc., etc. We have said that gold is under pressure and is expected to remain under pressure the whole week. Bitcoin has some premature signs of a rally. So basically it exited our down channel and close and break out the down channel yesterday bullishly. And that was a very, very first sign that the long-term rally could continue. And right now, I'm gonna cover Ripple. It's my Ripple. And here we go. This is Ripple. Okay. We have seen last week together the position, if you remember, something looking like an inverse head and shoulders. Remember? Do you remember, guys? I don't think it was only the position here. I think many of you were here last week. We have spotted last week an inverse head and shoulder that was a bullish pattern. Indeed, it was triggered. We have a breakout of the inverse head and shoulders on the upside, which was a bullish sign. However, after it broken the inverse head and shoulder, it reached 3.3877 level, reversed some gains, but held above the neckline. Above the neckline of the head and shoulder, now it's our support zone, right? This is now our support zone. Have you seen that? And indeed, the asset holds above it. That's an indication that bullish bias is still on. Okay, that was just a correction. So we need to be very, very careful. This is a 4-hour chart. Okay, I'm gonna get back to the daily. So the neckline coincides also. Look at this beauty. Beautiful, beautiful. The neckline, the breakout basically of the head and shoulder formation, was in line and coincided with the breakout of the mid of my Bollingers. So, and this zone is not only the neckline of the inverse head and shoulders, is also coinciding with the 38.2 Fibonacci level on this latest down leg. Okay. And it's also coinciding with the mid of my channel, with the 20-day moving average. So that suggests that this zone is really strong support level. It's a really strong support level. So as long as repo sustains a move above this zone, that's a bullish indication. Okay, but it's not enough for confirming that we are at the beginning of an uptrend. Not yet. Okay, because we have this reversal and a pretty dodgy session yesterday, pretty dodgy session so far today as well. And the fact that both Bollingers and moving average are flat suggests that it has entered some kind of a consolidation zone, basically a range market between 3.010 and 3.315, 3.3150. So it has entered a ranging market. So yeah, but that support is really strong. So there's no indication for a break and a reversal back below 310 level. But we don't have the go ahead, let's say, sign for a bullish bias either. Okay. Not in the medium term, at least. In the short term, the 1 hour, even 30 minutes chart, okay, we have that's not that's not a descending triangle. Ignore that. Let me see. We have some bullish bias the last 2 hours, more than 2 hours, nearly 3 hours, overbought. Moving average keep pointing higher. Stochastics, though, is flat. So it will probably enter some kind of a consolidation. So the position in the 1 hour chart or 30 minutes chart, it seems that it will consolidate a bit just to enter back into the Bollinger Band area because it's overbought right now. But the thing here is that it needs to sustain and move above 318 level. As long as it holds above it, then another move higher and more precisely a break of 320 level, that could be a confirmation for another swing higher. Okay, with the next resistance at, if that happens, 323.35, basically the latest swing high coinciding with our 200 period moving average in this 30 minutes chart. Okay, so guys, that was pretty much it for the day. I don't know whether you have any questions. Now is the time to let me know. So yeah, now is the time basically. Let's see gold before we go. Gold once again. Here we go. Yeah, pull back, but holds above 33.41 level. Overall, remains under pressure. Yeah, okay. Sorry, too many lines. It's because I'm jumping from one time frame to the other. Parabolics are at the top of the price. Another swing low. Stochastic have a bearish cross. MACD the same. Yeah, it is what it is. Since both Ripple and SEC dropped their appeal case, and I think the case has been dismissed. So if the Fed does cut rates, what impact will that have on cryptocurrencies? Okay, that's a good question. Basically, it could just support cryptocurrency market more. I mean, it's all about the weak dollar at the end of the day. So even though they have like dropped their appeal, overall it hasn't we haven't seen a really negative impact on the cryptocurrency market. I mean, overall still they're like holding at record highs, holding the year's gains, so that was not enough. Okay, so Fed cuts at the end of the day, and especially with a really dovish conference in September, that could open the doors to more rate cuts, that would be still negative for dollar, and that will provide some safe haven demand for cryptos, because we have seen cryptos benefiting on safe haven demand. So yeah, I realized. Don't worry, I realized what you meant. Don't worry about it. Woohoo! Just broke. That's my gold. Yeah. Guys, I don't see any further questions, so I'm gonna call it a date. Okay. Anyone that has just joined, don't worry about it. The live stays in the YouTube channel and Twitter. So just drag and drop your cursor where you want to see which asset you want to see. We have covered today gold, Bitcoin, Ripple, dollar, yen, euro, dollar, and Aussie, briefly Aussie as well. Yeah, that's it. Thank you very much. Have a great day ahead. Take care. And see you again next week. Thank you. Bye-bye.